Good morning, Predicted Trades family. Hope everybody's doing well. Hope you had a great weekend. We got a lot to cover today, so I'm going to jump right in. First things first, we made a lot of improvements to the Beast tool over the weekend. The first thing that you'll notice is I've added some labels over here. They will always show up to the left of your chart, to the left of the cash session. For options, there is no overnight, so at options, these will appear right at open. But for all of your equity charts, these will be over in the pre-market area. And basically just added some labels to each of our levels to let you know what they are relative to, like that PowerPoint webinar that I put together. So, basically we have our open level, our open range buy zone, sell zone, our midlines down, midline up, and then the destination sell zone, destination buy zone. Now I built in a lot of features, or a lot of ability to turn features on and off in the tool. So if you do not want to see those labels, you have that ability. Just right click anywhere on the tool and go to edit, and you'll see there is a toggle here for show labels. You turn that off, you'll find that those labels go away. Come on, Tuss. So there you go. Now it looks just like normal with no labels. Some other features that are available. There is an ability to turn off previous day's data. So, where the Beast tool plots, there's a way to turn off previous days so that you're just looking at today if you're trying to just save resources or don't want all that mess in the past. So there is the ability to just show today only. There's another little feature called Show All. This is, let's say, if you're on an options chart. Let's go ahead and load up SPY. Let's load up today. 14 call 400. Okay. So let's say on your options chart, and let me get rid of all this other gobbledygook. So we're just looking at this. Okie dokie. And one last thing, I just can't stand seeing theoretical price. There we go. So the other feature of turning off, the show all feature. So let's say on your options chart, you don't necessarily want to see the open range buy zone. You don't want to see all of these levels. You can come here to show all and turn off. So no. And when you hit apply, it's basically only going to show you the Beast zone down here, right? And a couple of levels. This is previous day's open, today's open, our destination sell zone, a midline, and then one more take profit. Point being, if you don't want all that, to look at all that, and you just want to know where's Beast zone so I can take entry, and then where are some take profit levels, you can come in and turn that show all to no. This show cloud is something I'm still kind of working on testing or whatnot. Basically, it should allow the ability to turn off the shading in the zones, but still kind of testing that out. So just wanted to show you guys some of those new features. The show today only, the show labels, the show all. And by default, it's going to show all, it's going to have labels, and it's going to show all days. But now we have some toggle switches to turn things on and off as we would like. The last big addition has to do with Yeah, Richie, I was busy this weekend. I had the computer open all weekend. But the last big improvement, just to let you guys know, is alerts. So I have coded in some alerts that will show or that will go off. The first alert, which is kind of the buy alert, is whenever price enters the beast zone. So if price comes into that beast zone, you're going to hear a ring, like a telephone ring. Then as price comes up, if price hits a open range sell zone, a midline, or the outer shaded destination sell zone, you're going to hear a ding. Now, this is a feature to help out some of our new members, as we all saw in the chat over the weekend. But if you do not want to hear these chimes, right? If you don't want to hear these alerts, it's very simple. When you come to edit your tool, edit studies, you just come right down to where alerts are underneath plots. You can come right in here and turn them off. See the enabled checkbox. If you do that and hit apply, then you will not hear the audible alerts. I bring this up and point it out because as you have this beast tool on your equity and your options charts, if you do not turn that off, you're going to be hearing a lot of alerts, right? If we open and go straight up to a sell zone, you're going to start hearing ding, 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 as in the take profit alert. And then as it comes down and hits any kind of beast zone on options, you're going to be hearing the ring like a telephone. The nice thing is on equity, we won't ever be hitting beast zones, so you won't hear any rings like if we hit our open range buy zone. I can put in the ability to have rings when we hit that open range buy zone. You know, I'm thinking of like you equity traders in here, right? If you do want those alerts when we're in a buy zone on equity, we can turn that on. Right now, we will only get the buy alerts when we are in a beast zone, which we'll only really get to on an options chart. So, today, if you find that you're hearing a whole bunch of noise come out of toss and you don't like it, come into your beast tools and hit this, turn off the alerts, right? And, you know, if you, excuse me, once you get the new beast tool loaded in, let's say you don't want labels and you don't want alerts, right? Get your new beast tool loaded in onto your chart where you normally have it. Come in and edit your study. Turn off your labels. Turn off your alerts if that's how you want it, right? And then there's two ways to do this. You can save those settings as a default so that anytime you add beast to your chart, it will always have those settings. So that's one way to do it. Then, once you get your settings the way you want and you're back on your chart and it looks good and you got the alerts off, if that's how you want it, right? Come up to Style and save that style. Then, on any other chart, to load it in the exact same way, you just go to load the style that you saved. So again, that's up in Style, Save Style, type in whatever you want, check this box for Include Patterns and Studies, and when you save that, you know, type in Beast or whatever you want to do. When you save that, then on any other chart, when you go to Load, you'll find that Beast sitting there and waiting, and you can load that same settings onto your charts. So I just wanted to give that brief little overview of the improvements that I packed in over the weekend, how to turn some of those things off if you're a seasoned veteran in here and you don't need them, or you know, once the cash session gets going, you're just hearing too much noise come out of those alerts. Now you know where to find it to turn them off. So, now let's get back to a normal prep. I'm on the wrong chart. There we go. So hopefully that all made sense to folks, and now you know where to find things, where to turn them on, turn them off, and hopefully we all enjoy those improvements. So let's look a little bigger time frame, and I'm going to go ahead and turn off all of our studies just so we can talk about this rally, where we are, where we can expect to go. And in fact, let's just go to a daily. Just talk to a daily for a second. All right. So first thing to note, we have our trend lines from highs, all-time high, well, basically just all the highs from this year, right? We sold off, came back, sold off, came back. So if you connect all those highs, you get this pink trend line that we are slowly approaching. Right now, to get up and test that trend line, we're talking back at 4136.5. And sorry, I know that there's a lot of levels here. But 4136.5 used to be previous low of year in the first sell-off. So 4136.5 is a big key level. And as we can see right now, that trend line is crossing over it. Point being, that's basically the magnet for this rally right now. Not saying we get there today, because that's pretty far away. It's outside of a normal ATR move. But when we talk about this rally continuing, this is the overall target. Getting back to this trend line near this 4136. And if we throw in our 200 SMA, and we go look where that's sitting, where you at? It is on the way to getting there, right? That 200 SMA currently sitting around 4075, 4080, right? So we have our 200 MA and our trend line above as the targets for this rally to continue to. Now, after such a strong rally and getting through resistance, right? We had a tighter trend line from recent price action from the last sell-off, the last test of our trend line from highs of year. We got through that on Thursday and Friday. Come on. Get rid of these guys. There we go. So, when we talk about any kind of pullbacks this week, sorry, one sec. Okay. When we talk about any kind of pullbacks this week for profit taking, to see if bears are in control, again, anything like that, we want to note a few key levels. Oh, you're killing me here, Toss. You're killing me. Sorry. One second. There we go. Come on. Oh, I'm going to throw this computer out the window in 2 seconds here. All right. What am I trying to show here? Basically, we have three key levels that we're going to likely see on any kind of pullback. It's this 3878, 3900, 3922. I know it's a little hard to see right now. We're going to zoom in a second. But while I have my cursor here at 3922, I want you to look left. Because it was resistance, and it was support at one point. It allowed for a bounce, then we got below it, then it allowed for a bounce, and then we got below it and rejected it, and now we're above it. Point being, we have pushed through some resistance in this rally up. Can we just keep trucking? Yes. There is a thesis that they don't provide much of a big pullback because there's a lot of bullish sentiment. You know, even though we got down in this last sell-off and did set a new low, that new low was immediately responded to with buyers that sent us higher. And that new low was mainly driven by that CPI reaction and snap back. And we had another CPI here that snapped us higher. Basically, they really like what they're seeing in the inflation numbers right now. Inflation seems like it may have topped out and is coming back, which would lead potentially to the next FOMC. They start reducing their rate increases. Instead of 75 basis points, maybe we move to a 50 basis point hike. If you look around at some of those estimates for future rate hikes, the consensus right now, on each rate hike that we've had, the consensus has been overwhelmingly that we will have a 75 base point. If you start looking at December's numbers, the majority of the sentiment has shifted to 50 base points. And the percentage of sentiment that is 75 base points has come way down. So there's a lot of bullish intent. Plus, we've had instances in this rally up where sellers tried to take control, but then they gave out, and they tried to take control, and then they lost. So there's a lot of bullish sentiment. Point being, can we just have, a whole week of green days? These things can happen. But it's always good to plan for the pullback and where can it go to. So overall, 39.22 is the big key target that we want to stay above. Now, saying that, we can slip a hair below it to 3900 at 38.78 to still catch our bounce and keep going. Basically meaning we can spend time under 39.22, but then we want to get right back above it and start the rally, continue the rally. Below 38.78, we're talking about the gap from CPI to where we opened that we would have to contend with. And really, we could even reach down into that gap. We could even hit the bottom and keep going, and we'd be setting consecutive higher lows on a daily time frame. So we should be cognizant that we might be getting overextended and we need a little bit of a pullback. And we want to identify where that pullback needs to stop for buyers to remain in control. Okay, so we've got our targets to the upside for continuation on this rally. We've got targets to the downside for pullbacks and where we want to see them hold. Let's step back down to our normal tool set. Oh, and thanks. I'm seeing some very kind words in the chat. You guys like the improvements to the tool. Looks great. Can't wait to use it. Thank you. Try to put in a lot of good work around here. So, we are approaching the top of a daily and 2-day squeeze. As you can see, the daily squeeze getting thinner and thinner, meaning it's getting ready to fire. That 2-day squeeze does still sit in the way, but it's also getting a little thinner. It spans up to 40.56. 40.56 was the second low of year past 41.36. In fact, darn it, that is the one last thing I wanted to show. Let's turn these off. Absent-minded professor. Gotta go back and look at some things. Okay. So, 41.36.5. Let's go back to the beginning of the year. And that should cover us. 41.36.5 sits right here. So we had our sell-off in January and into February. And where did we stop? Pretty much this 41.36.5. We did wick a little bit lower. But that was what we held and held repeatedly and took off. We even held it a couple of times and acted like we were going to take off before heading lower. And you can see right here the wick that broke through it, and the other low got down to 40.56. So I just point that out to say when the sell-off started, we had some bounce points around 41.01, 41.36.5, and then once that started to give out, 40.56, where we bounced again and started a little rally before giving out, and then we reject 41.01, and then we reject 40.56. So these are very key levels that we are approaching again. .56 sits just above and technically could be in range today if we just get continuation. And then 41.36.5 further. All right, I made my point. We can move on. Let's get down to our normal time frames. So, we do have our daily and 2-day squeeze tops up above. Can we just keep pushing into them? Yes, we can. But as you can see, we can push hard to them, and then as we try to push through them, it can be smaller moves. But as long as we keep pushing into them, they'll slowly get thinner and start to fire. Our daily 200 sits just above that 40.56 at 40.80, so something to remember, just some key targets to the upside, should we see continuation. We do have a 30-minute, well, we have a number of squeezes, 30-minute, 1 hour, and a little bit of a 2 hour starting to form. Here's your 2 hour. Point being, we have a number of stacked squeezes today. If we do not have a ton of volume and sentiment or buying sentiment coming in, right, then we're not going to push through these squeezes today. For continuation, now that all of these squeezes have set back in, we have to push up against these squeeze tops most of the day. Then they will open up overnight, giving us a clearer path up after today if we keep pushing into them. So overall, we've got our 30-minute squeeze, 1 hour squeeze, 2 hour. All squeeze tops are stacked together from about that 4005 up to 4020. Just meaning if we get up there, yes, we can push into them, but when we have thick squeeze tops like this, we'll push in, then we'll get a hard pullback, then we'll push in and another hard pullback. We also need to be ready for any kind of profit taking. So we want to start using this 30-minute squeeze as our gauge. It spans down to about 39.75 and up to 39.96. So that's kind of the range we'll find ourselves in at open, where we could tag 39.96, maybe even 4,000. We could pull back to that 39.75, catch a bounce to try to keep going. Just trying to give us some scenarios to think about today. We can use our squeezes as a guide, this 2 hour being nice and thick and spanning our zone below. Basically just means if we start to lose 39.75, we have a good idea that we can drift down to this zone where the big 2 hour squeeze sits. Giving that out then lends to the pullback to 39.22. But holding up above this zone and these squeeze bottoms lends to a bounce and to getting back up to test our 39.96, 4,000, and trying to push up to that 40.20. I could foresee a scenario today if we are going to see a little profit taking, where we dip down and tag our zone of support, our squeeze bottoms, and settle, and then have a rally end of day to try to push to that 40.20, closing up in our squeeze tops, which would allow them to open up more overnight and into tomorrow. So, we have our range from our squeezes, we have our targets to the upside, our targets to the downside. So we're pretty set for the day. We've covered a couple of theses, right? We could hold support and just keep trucking. We could run into some resistance, come back to test some key levels before heading higher. And if we get down here to test these levels and start to give them out, we know the targets we're trying to get back to retest and to catch a bounce for continuation. Before I get too ahead of myself, let's take a quick look at the economic calendar today, or this week. So for today, we have a little more inflation expectation data coming out from New York Fed at 11 a.m. We've got Brainerd speaking at 11:30. So about that midday point, we have a little bit of turbulence that could head our way as that data comes out and that Fed speaker is talking. Tomorrow we have PPI, Producer Price Index, and we have some manufacturing data. And we have more Fed speakers and a little bit of housing data at 11 a.m. Wednesday, we have retail sales, import price, and some more Fed speakers, yada yada. The retail sales could hold a little interesting reaction. Right, we got our consumer sentiment index, our consumer price index, CPI, last week. We're going to get some producer price index, right? So we saw our prices as consumers. Now we're going to see prices for the producers, and we'll see some of the retail sales, just to see, are we as consumers still spending? Then we've got some jobless claims, as we do every Thursday, and then a little bit of home data on Friday. Overall, this is a pretty light week as far as economic data. PPI and retail sales don't hold as much weight as CPI. Looking to next week. Very light Monday, Tuesday. Wednesday, we've got some durable goods, core capital equipment, our jobless claims, as always. Oh, and then we're getting into Thanksgiving. So, we've got a couple of light weeks on the economic calendar. It's very good for this bull rally to continue. And I believe, correct me if I'm wrong in the YouTube chat, but I believe next month in December, our FOMC and our CPI fall on the same week. So we're going to have a double whammy coming at us to say if everything is still looking good, if they do reduce the rate hikes and inflation numbers for that come out next month that are, for November, if those all look good, then we could see a continued strong rally into the end of the year. The only reason I point that out is because we want to think about, not again to jump to the daily, but I'm going to do it one last time and then we'll move on. Sorry, I know I've spent a good amount of time just covering ES, but for me, ES is my gauge for the market. So, point being, if things do go well in December when we have our FOMC and our CPI, we could see an interesting scenario play out. We have time between now and then for this rally to continue up to our trend line. Would not be surprised to see a little profit taking, continuation up to that trend line, and maybe some consolidation until we get that data. If we do see a reduce in the rate hikes and continuing improvements to the inflation numbers, then we could be looking at a breakout for the last month of the year where we get through our trend line from highs if we're not already through it, and where we try to recover up to some big numbers, which would basically mean that the year will still be negative, but only by a little bit, right? Just a scenario we have to think about. Just like every month, we look at where we started the month, where we end the month, and there's plenty of times where the month looks bad, and then right at the end of the month, they bring it right back up for somewhat of a flat month, right? Well, got to think about that this year. If we can get a lot of risk on in big tech names, in the sectors of the S&P where we see traditional risk on, meaning investors are stepping back in. If we can see that for the rest of this month and leading into December FOMC and CPI, if those numbers come in good, we could see a very strong recovery so that overall this year is a minor loss. So just something to keep in mind. Not trying to sound too crazy, but I could definitely foresee the scenario. Let's move on. NQ. What have you got for us today? Qs are in a bit of a breakout. I'm not going to keep jumping back to the daily, but if you look at the daily, we were in a consolidation range, and now we are breaking out. We've got our first couple of candles breaking out, and we're back over the daily 50. So, any pullbacks? We've got a key level here at 11,677. Should that start to give out, 11,500 is going to be very pivotal at this point. We need to hold above that daily 50. And yes, we do have our daily 21 just below, and it sits pretty much where we took off from CPI during the cash session. Point being, the only amount that I would allow the Qs to slip below the daily 50 is just to tag the 21 and then get right back above the daily 50. Otherwise, losing the 21 means we are losing our breakout on the Qs and we're back down into consolidation. And like I've been talking in preps and in the room, we've had leaders to the upside in this rally, and for the most part, it's been YM and the Ready. Those two have been leading and carrying us up, and now, finally, the NQ, Tech, is waking up. Point being, we need to see, the YM and the Ready maybe getting a little overextended. If they take a break, we need to see them pass the baton to NQ. We need to see NQ start to get rotation into it if YM and Ready see sideways action or rotation out of them, since they have been leading. If they're going to take a break as leaders, we need NQ to step up and be that new leader. So we are approaching, again, the top of a daily and a 2-day squeeze. And not surprisingly, that 2-day squeeze spans our next key zone to the upside. So for NQ today, this week. Oh, and I'm now remembering, this is an OPEX week, folks. So one scenario is we've made our good push up. Just going sideways is still bullish. It allows our moving averages to come up, so when we take a dip, we can tag those closer to where we are and then take off. But point being, as we approach squeeze daily and 2-day squeeze tops on an OPEX week, we could just see some sideways action up here, maybe a little grind higher to get these squeezes ready to fire. But we've seen plenty of OPEX weeks this year that are still, very active and don't just stay in a range. We see, some interesting push-ups and some big drops. So overall, on NQ, we need to stay above the daily 21, above the daily 50. So on pullbacks, that's the target that we need to hold and catch the bounce. For today, we've got our squeezes in place. Oh, and I'm glad we all saw this right here. If you missed it, basically those alerts, if you have them on, they're going to pop up little bubbles over here every time an alert fires. So YM just ran into its open range sell zone. I know that because it says take profit. That's what I coded it to say when we run into an open range sell zone. We'll confirm that in a minute when we look at YM. But point being, you're going to see little bubbles pop up over here whenever we run into a zone. And then the bubble disappears, and if you miss it, it's sitting in your messages. So like these are all alerts that have come out this morning overnight on equity when it ran into sell zones. So we have our squeezes in place and for NQ going into open. So we've got our range set and ready. If we can start to push through this 30-minute squeeze to the upside, looking to get back to Friday's highs, and if we can continue, big key psych level, 12,000 sits above. So that's what we're trying to get to today. Or, if not today, this week. But if we start to see some profit taking and lose our 30-minute squeeze around this 11,750, then we could see a slip down to the 677 today. Our 2-hour squeeze sits a little bit lower at about 11,600. Should we start to give out each of those, we've got that 2-hour squeeze, and below that, then it's back to the daily 50. But we had those 2 strong days. Everybody on the street is thinking, oh, time for a pullback. We never know. They could just keep the buying going. So use your smaller ranges. Could just be a dip to test pre-market lows, and we just keep trucking. But we've got our targets to the downside, targets to the upside. Play this range until it breaks to go visit one of those targets. The ready. Getting closer and closer to 1900. Already above the daily 200. So ES and Q still well below their daily 200. Ready already above, just kind of lending to what I was talking about the Russell. And YM have been leading to the upside. They've already reclaimed their 200s. So if they start to take a break below their 200s, we still need to see NQ rallying up. It can carry ES, even as we see rotation out of the leaders. Just something to be ready for. Looks like we're holding that daily 200 at the bottom of our squeezes, pre-market. Get a little bit, there we go. Yeah. So, if we start to lose that daily 200, we're going to slip down into these squeeze bottoms. We have a daily Keltner right at that 1860 at the bottom of that 2-hour squeeze. I can't stand this zoom. If we start to give out that 1860, then we're talking about these moving averages below and kind of back to where we started the cash session running on the CPI data. So we've got our daily 15, daily 8 as support and the target if we start to lose our Keltner and the squeeze bottom. If we can continue to the upside, it's all about 1900. We need to get above 1900, stay above 1900 to keep on going. Our second Keltner is at 1930. Next big key level, 1941, and our third Keltner at 1964. Going on to YM. Well above its daily 200, which sits back at 32,500. Point being, if we start to see some profit taking and a break in the leaders, YM and Ready, they could be coming, YM has plenty of room to get down to its daily 200 for a test and a bounce, and we could see continuation. Our daily 21 sits just below that 200, so it could be, not saying it happens today, it could be if we stay up here for a little while, that daily 21 will catch up to that daily 200, making them a double stacked kind of magnet. Point being that, it might be sideways for a couple of days in between these key levels before any significant pullback, and when that significant pullback comes, we might have our 21 and our 200 stacked right on top of each other, and it would just be a reset to where we started that CPI run. That's still very bullish. So YM has room to pull back, still remain bullish, and allow NQ to lead. And I mentioned all that just because in a trending market, we are in an uptrend. Rotation is healthy. They cannot buy everything at once. We don't want to see all indices pumping for days. It's not a healthy move. It is more likely to snap back than if we see rotation on the drive up. Rotation is healthy for us. So for YM today, 33,500 is what we need to hold on any pullbacks. You can see we slipped below it on Friday. Oh, excuse me. We slipped below it Friday, and then we got right back above it and near the highs. It's worth noting, we never got back to pre-market high, and we are a little bit lower here. So we could be seeing the beginning of what it will look like for some profit taking on YM. Let's see if 33,500 can hold, if it can, or if we bounce before then and keep going to the upside. Obviously looking to get back to Friday's cash session highs around 33,800, pre-market highs, and big key psych level around 34,000 as your upside target. Moving on, Apple. Ooh, and I need to accelerate. We're running out of time. Apple back above the daily 50 and at some of our key levels here. Oh, and pullbacks want to see us stay above 147.5, above that daily 50, and continue this party higher. Again, we need to see tech remain strong and keep pumping, and Apple's a huge part of that. If we lose this 147.5, we could come back to test this zone around 144.5, 145. The daily 21 sitting there as well. As long as we bounce there and get right back above 147.5, this is all still bullish and a healthy pullback for continuation. If we can continue the upside, obvious first target, getting above 150, 151, where that first Keltner to the upside sits. And then if we can continue through that, it's up to our zone above 140 or 153.8, 147, 154.7. Our daily 200 sits up there as well at the top of the daily squeeze near that second Keltner. So that's your target to the upside, and then that 155, 156, where that daily 200 and second Keltner up sit at the top of that daily squeeze. Yep, on to AMD. AMD had a very strong end to the week. Well, let's see, had earnings. Something I'd like to point out. had earnings. We always want to look at the earnings high and low wick. What we saw last week is a push up above that high wick, and then on Wednesday, the whole market took a little slip just so they could load everything long. On Wednesday, what was it? Everything from the 65 call up to the 70 call. On Wednesday, those options got down to pennies. I'm talking like that 65, maybe like 40 cents. And everything above that, like these 70s, they got down to, I think, 2 cents. And then they closed the week way in the money. So it's very hilarious to me what they've done on most of these charts if you look around. They started a rally, gave the rug pull look right before CPI, and they loaded the whole second half of the day on Wednesday. If you look at any calls leading into the end of the week or into this week, they loaded at Beast Zone on everything, on SPYs, on Qs, on Apple, on AMD, on everything. So, very hilarious, and it's even funnier to me that they did it right before a bank holiday on Friday. So they rip it up on CPI, everyone's chasing, none of their cash settles going into Friday. You're limited on what you can do, and they just keep going. Anyway, AMD on a tear, setting new highs, pre-market. A lot of buying sentiment. Came off of that 56, held it for weeks. So, very strong, already up to third Keltner on AMD. So it could potentially be time for a break. Oh, on any pullback, we got to stay above 65 in this daily 50. I know that that's 10 points down, but we are getting up to that third Keltner. You never know, they might take a sharp profit taking on some of these names. Can we just keep pumping above third Keltner and keep going? Yes. So, for today, let's see if we can get through the 75.24. And sorry, I'll zoom in a little bit better so we can, come on. There we go. Can we get through this 75.24? Then it's to 77 if we start to reject here. And have a pullback looking for 72.3, 72 to hold. It's basically where we closed. And if we can keep going, it's 77, 78, 79, yada yada. Moving on. Amazon. Amazon made some decent moves up to get back to 100, 101, slipping below a little bit this morning. If we see continued pullback on Amazon, looking for this 97 to hold us up. We fought to it, we held it and pushed off it. Want to see us hold again. Otherwise, we're talking about coming down a little further. If we can hold and start to push through this 100, 101.7 where the daily 21 sits, then it's up to 104, 106 where the first Keltner is near. Like I said, passing the baton. This name has been beat up, and now it's pretty much back to the mean. We have room to the upside for some of these names in tech to continue the rally on the market, allowing YM and other things to take a break. So, let's see if they hold it above 97 and continue this truck higher back to the daily 50 at about that 113. BA, one of the names that has been leading to the upside. We'll have to see if it's about time for a break. This 180, 175 range, very key. We start to lose that 175, and Friday's low at about 173, it's back to 170, and maybe even back to our zones below, our moving averages below. Daily 200 going to be big. We pretty much got to 180, so it might be time to take a break back to 160 before heading higher. Cat. Man, thing almost got up to 240. Cat, same thing, been leading above the third Keltner. If we start to lose 232, and we're talking about coming back to 228, where that daily 8 sits, our daily 21 catching up to 212. Pulling back to even there is still bullish. You know, we had a big run up after earnings. This was the only pullback given to 212, and then we just kept going. So, basically just saying we can pull back to this daily 8. We can pull back and have a reversion to the mean at 212, and still this is a very bullish setup. I'd have to go back a little bit further. Yeah, there we go. I mean, look at this run up. Just taking off. Even pulling back to this 212 and bouncing, it's very bullish. Basically, that's where we ended up after earnings and where they took off from. So profit taking right back to that and a bounce to go back up, very likely, very healthy, right? Profit taking back to a key target and then keep going. Coin. Coin, I talked about this on Friday's prep. I even pointed it out and wrote a little like PSA about it in our room. Because I talked about on Friday's prep that we were approaching this trend line that was holding us down. We could see a great big move up. I think some of these coin options went like 20x or more. And it's a little hard to see, but there's a wick here. It opened the day, dipped down to a key level, 46, took off to 56, made a 10-point move. On coin, on a pullback, we want to see us hold this 52.63, and if we bounce there or sooner and keep going, I need to take out this 58.64 to get back to the daily 21, the mean, which sits up near that 61.62. Past that, looking to get to the daily 50 at 66 and to this 70, big key level. Google. One of the names starting to play catch up. What are we doing? There we go. One of the names starting to play catch up. Very strong move from, let's just call it about this 86, 87. Now we're up at 96, 97. On any pullbacks, want to see us hold above the daily 21, which sits pretty much near this 93.4-ish. And if we can catch a bounce there or about 95, looking for us to continue up to the daily 50, which now sits at our key level 98.78. Past that, we've got psych level 100, 101, yada yada. Our third Keltner sits up near this high from earnings. So we've seen plenty of names get up to their third Keltner and keep going. Let's see if they are going to continue to rotate into XLC, into Google, get us above this daily 50, and back to where we sold off from earnings. GS. Finance, another leader that we've had lately. Look at this. Getting up to 387, man. So, I mean, at this point, if it's just going to keep going, you know, it's 390, 400. Those are the key targets. But it's very extended past its third Keltner. Could be time for a pullback. Might be 390 is the wall. That starts to send us back below 380. And then we're talking maybe back to the daily 8 at 365. And our daily 21 is catching up to 350. A pullback to 350 and a hold is still very bullish. It's like our last pullback before just going higher. So if we start to see these names take a break and whatnot, targeting 365, 350 to the downside for something like GS. JPM, it's going to be the same and very strong. I can already say that its level to pull back to is 125. Right there, big key level. The daily 21 and the daily 200 sit right straddling that. So if we start to see a break and lose 132, then we know we're probably coming back to test that daily 221, a little reset for finance while tech leads. Then we could see a bounce in finance while tech has a little break. Meta, 113. Ugh, it made it. Jeez Louise. Well, I've been saying for the longest time, since earnings at least, don't touch Meta till it's above 100. And the second I got above 100, just kept trucking up to 113. It's above the daily 21, this white line at about 111. We've got Friday's low around 109, so looking for 109, 110 to hold us. If we're going to get continuation, to push through this 114 and get to 123, next big key target. But if this 113 is going to be resistance, and we do have a stronger pullback than holding this daily 21, then we're likely coming back to this 104, 105, where the daily 8, daily 15 sit. Quick little reset before heading higher. Or we just keep heading higher. Microsoft. And sorry, I need to start accelerating through these names. It's 9 a.m. Oh, Microsoft made it back above 241, 240. Looking to hold that on any pullbacks. We got our daily 50 sitting there as well. Want to see us hold that and continue this journey up to 250, 255, and our recent high that we sold off from there. If we're talking higher, then it's the daily 200 and 266. That's the big key target to get to. If we're going to see tech lead. If we start to lose that 240, that daily 50, then it's right back to 232, where the daily 21, daily 8 sits, 232, 230, and even a pullback to that, as long as we hold, can lend to a strong bounce to get further continuation. Netflix made a big move Thursday, Friday. On Friday, the 275s, the 280s, I think both went 10x. On Friday alone. We're back up near 290. The overall goal is to get back to 300, 306, and try to keep going. Our third Keltner sits just above that. So it might be that we need to do a little bit of a slower grind up over a number of days to let that third Keltner extend a little further. The end of our gap fill from our earnings, right? Netflix had a big gap fill here. It spanned up to 333. So, to finish filling that gap, we need to see Netflix get up to 333. With our third Keltner around 310, it might be that it's a slower grind, allowing this to move up day by day. But overall, let's see. On any pullbacks, probably want to see it stay above 280. If we start to lose 280, then it might be back to the daily 21. But we are starting to get a strong breakout after the selling. Here's our trend line from that selling. We're getting that strong breakout. So let's see if it can continue. I want to see us stay above 280 to continue this trek to 300, 305. NVIDIA. Already up near third Keltner, much like AMD. Very strong Thursday and Friday. Oh, next big key target, that daily 200, which is closing in on 180. So definitely want to watch the 180s this week, right? We could continue a slow grind, could have a slight pullback, want to see us hold above this 147, 150 to continue up to that 180. QQQ. QQQ. We're near this 285. If we start to give that out today, then we could be heading to some of Friday's lows around that 282, 281, and 280. We've got our daily 50 just a hair below that at 278. Just for some downside targets if we get a pullback today or tomorrow. Looking for those to hold and continue this journey higher to 290. The top of this 2-day squeeze at about 295, and then that psych level 300. SPX. Minor gap down about 10 points. Oh, so we're going to be open at around 3090, excuse me. On any pullbacks, want to see us hold, Friday's lows at about that 2950, and the close of all these candles at around 3960, 3950, 3960. Looking for that to hold today for us to continue higher. The daily 200 up around 4080, just like we have on ES, and our third Keltner to the upside around that 4075. So let's see if we can hold that 3950, 60 and continue this journey up. If we start to lose that 3950, you want to look left at all these highs, right at about 3890-ish. That could be the pullback. Hold those highs, turning resistance into support for continuing higher. And we always just want to keep an eye out for the big gap that we had from CPI. Even a gap zone can be support, saying it's basically if we bounce there and continue the rally, that's buyers saying we don't need to fill that gap. We are in control. Sellers can't take us through that gap. We're going to try to keep going. SPY. Come on, come on, come on. So 395.8 is a very big key number. Today, would love to see SPY hold that up. If we start to slip it, we do have some saving graces at Friday's lows and squeeze bottoms. So we could slip it for a sec and then get back above. But overall, looking for that 395.8 to be our support today to get us up to 400. If we can see some continuation, we've got that daily 200 up at 407, near our next big key level at 410. If we start to lose that 395 and Friday's low, we can easily fall back to this zone where we opened at CPI, right? We had 2-day continuation. We could see a little pullback to right where that started and then go higher. So if we lose that Friday's low, then we're coming down to test 390, 388.5. Our daily 8 will likely be stepping up into that zone. Tesla. So, another lagger that could see some rotation into it. Excuse me, over the next couple of weeks. We got a couple of weeks left in November for these laggers to start to catch up to their daily 21s. So, on Tesla, I want to see us hold 190 today and make a push up to that 200 for a test. We start to lose 190, coming back to retest 185 at the bottom of this 2-hour squeeze. But if we can hold 190, looking to get to 200, and if we can get continuation at 206, 210 zone where the daily 21 is catching up to. UVXY. So for continued upside today, this week, we want to see UVXY get below 9 and continue this little journey down to about 8.5 where that third Keltner sits, maybe even $8. But if we're going to start to see some profit taking the first day or so of this week, likely going to stay above 9, get above 9.5 and try to make a push up to 10. VIX. VIX getting down to our 22.5, having a gap up, which is not that concerning. We're having a small gap down. So if we're going to see continued upside, at least VIX now has some room to drop to that 23.3 again, 23 and 22.5. Now we have some room. It's a little better than if VIX just opened right here, and we, our next targets would be like 22, 21. Setting new lows. Now VIX can just get back to low and the market can push higher. So if we're going to go up, looking for VIX to get back down to these levels, but if we're going to see some profit taking and pullback the first day or two of this week, we'll likely see VIX hold above this 23.3, get above 24, 24.5, and try to go test 25, maybe even where we started this little sell-off on VIX from CPI, back at that 26, where our daily 200, daily 21 sits. Right? Like if we're going to have a strong pullback, let's say Monday, Tuesday this week, and then rally the rest of the week, we could see VIX come up and hit these targets, this daily 21 and 200, and roll back over to make a big H. One last thing to point out is this. Make it a little bigger. There we go. Always like to check in on our 45 MAs, right? This is a chart with the 45 MAs from all intraday time frames. We got back above the 4-hour, this blue line. And as we can see, now that blue line has stepped up above our gap. Just meaning a pullback to test that gap and hold that 4-hour 45 still is a bullish sentiment. So when we look at pullbacks today, we're up here at our 15 and 30 minute MAs trying to hold. Should those start to give out, that 39.80, then we can come back to test. Oh, I'm sorry. This is 15 minute, this is 30. We're trying to hold at 15 minute and probably 5 minute if I had to guess. So if we start to lose that 39.80, then we're going to vacuum from one moving average down to the next, which sits at our zone below. That zone I said for support today, where we took off from Friday. So just talking about our MAs, if we start to lose that and pull back to this, still bullish, still could catch a bounce off this zone and continue back up. And we see where our other MAs sit, the 1 hour, 2 hour flanking that 39.22, that level I covered, and then our 4 hour at that 38.78. Basically just lending confluence to we can pull back here and it is still healthy if we bounce and continue. So that's it for today. Hopefully this was helpful for everybody. Pick up your beast tools. I shared them late last night after I got done with all my tinkering in the code. Hope everybody enjoys the improvements. Good luck today, and we'll see you in the room.